All right. Vocals check, check. 1, 2, 3. Looks pretty good. Vocals are on. LP Trades, it's good evening. Hello. All right. Good to see everybody here getting ready for weekly prep now. So we're going to take a look and see what we've got this week as we get into the middle of the month. Hello. How you doing, LP Trades? Could you talk about the debt buyback program launching end of May today, if you know about that? Yes, absolutely. I would love to. That is a really, really good question, and something that I've has really kept my shorting in play because so we'll touch upon that for sure, LP Trades. So let's take a look over at the charts. Try not to make this too long for y'all, but we're gonna take a look at economic calendar, and then we'll also take a look at that treasury buyback schedule, and we'll talk about that a little bit. All right, let's go over to the charts. Let me see if I have that. I'm gonna pull that up on the side. To make sure I find that PDF again. I think it was this one. Yeah. Okay, cool. We'll pull that up in a little bit, but let's take a look at the charts first. Okay, so we know we've got Fed speakers all throughout the week. There's Fed speakers. So during those times, like Thursday, probably not going to be a fun time to trade in the afternoon. And then Friday, you've got Fed speakers. Monday, Fed speakers. Tuesday, you're gonna have PPI and JPow speaking at 10 o'clock in the morning. So I think Wednesday is when we're gonna see our high or low of the week, and Thursday, Friday, we'll see the trend, a little bit of trend in the week. We'll use unemployment claims to jettison ourselves in a direction. Not exactly sure which one. Let's take a look at the charts first. But notice we are in the middle of May now. And if we take a look over at the charts, let me bring over this one here. And I'll move this back over here. So we're going to take a look at some of our weeks that have gone past. So we can kind of see how we've actually really just done not much here at all. This whole down move, people were thinking this is going to be the short. So during this week they shorted, they got squeezed. During this week, they think it was over. They got squeezed. And what's going to happen this week now? We have a few other things in mind, so we're going to take a closer look at that. But first, we want to take a look at dollar and get a guiding principle for where we think we're going to go this week. I'm going to look at the monthly first, just so that we can ground ourselves, right? So we know that in the grand scheme of things, dollar has been going lower in general. When we see things like this, we do see dollar has spurts of heading higher, but inevitably during times of economic growth, back in 02 all the way through back to 14, there's huge amounts of economic growth. And then we had a spike in dollar, right? 17, 18, 19, 20. We had in 2020, we had a brief spike up, a nice rally, and now we had this whole year of 21 to 2022 where we was more bearish, and now we headed back down into consolidation. So from a macro perspective, we see that there's still some area here left to be traded to on this higher time frame perspective. It's easier to see, even much so, on the weekly chart, where we zoom out. We're going to see that we have quite a nice consolidation here, right? So if we have this original consolidation here, what does this kind of look like? Well, we have all these areas of accumulation, and then original consolidation, like terminus, and then we have displacement, accumulation, displacement, back to accumulation. This tells me that dollar wants to likely head higher in general. So we are going with the assumption here that dollar has the ability to potentially trade for these relative equal highs here, as well as this sell side imbalance, which is outstanding. Does it have to do that? By no means. It does not. And what I was hoping to see is I actually see on the monthly on the dollar, we can see that there's this buy side imbalance that just got fully rebalanced here, but we've not traded lower and closed lower than the upper quartile of this area here. So I, from a monthly perspective, or sorry, weekly perspective, I'm still of the impression that we may end up trading for these weekly relative equal highs that you see here and here. I think that that's still likely the draw. We do have, and we do see that we've started the week up higher here. So key points that you're going to want to keep in mind are the halfway point of this previous wick, the high of this week, and then, of course, that happens to be what none other than this week's low. And so if we trade up to the midpoint here and fall, that could be an option. Or we trade higher, lower. Maybe we make a low of the week on Wednesday and then trade higher towards this rejection block up here. So this early on in the week, very difficult to tell. But from a higher time frame perspective, it does look like the weekly traded back down into this BISI, rebalanced all of that, came down further, but had been bought up, closed right around this area within near that BISI, and now has fully rebalanced this. So whichever direction it leads to, I think that there's still outstanding liquidity that's been waiting for a long time up here. So does it continue up to take that out first? That is what I would like to see. And then on the daily chart, you see something similar, just with a few more candles. You can see we traded down into a daily buy side imbalance, sell side inefficiency. And since then, we've kind of just been consolidating and handling within that weekly range there. So until we break out of that range in one way or the other, I think that that I'm still bullish on dollar. I think that we have the ability to move higher. We haven't closed below a key intermediate term low, in my opinion. And so if we end up closing above here, and don't trade below the previous day's low to on Monday, I would see this then as the next intermediate term low, which if dollar then trades below that, that will shift my bias to lower dollar when we see a displacement below that. But until we do, I'm looking for opportunities for higher dollar. We are in this consolidation area though, so we're right in between a previous area of consolidation and an area of accumulation. So that makes trading quite difficult until we can break out of that. And I'll try to like create boxes here so I can visualize that for you. So this consolidation area, oops, really only goes to around here. And then we have this consolidation area as well. So between these two areas, we're ping-ponging between the two. So you can kind of get how difficult it is to come up with a bias at this point in time. And so that's why I think Michael is also talking about trading without a bias, trading individual session highs, session lows, and using those and in expecting that we have a reversal at those levels. So, so from a dollar perspective, that has not changed. We're still within this range, so you want to be nimble this week as well. Okay, so on the weekly for NASDAQ, and what I'll do is let me splice in the Treasury discussion now because I think it's going to be important as it frames our week 2. So there's definitely discussion here that I think we've got in terms of, let's talk more. Let's bring that over here. All right, so if you follow the Fed and you must follow the treasuries and what things are doing in the bond market, because If you haven't studied ICT, his 2016 content surrounding the bond market and how that impacts other markets, I would highly, highly recommend you go deep into those kind of videos so that you get a firm understanding of what typically happens with dollar, what's its implications and applications towards other markets like bond markets, interest rates, and how that impacts stocks and indices, because you need to know that so that you can get more confluences in your favor of where you think price is going to go. So what I have up here, before we look at NASDAQ, we looked at dollar. What I have up here, and you can search this by just searching tentative schedule of Treasury buyback operations. What this means is that May 1st of this year, the Treasury released where they are more likely to provide liquidity by purchasing certain types of Treasury bonds, and you can see which types are going to be offered and searched at to repurchase back. They don't have to purchase any of them, so that's one thing to keep in mind, but their maximum purchase amount is up to $2 billion. And if the Fed wants the market to look well during a presidential year, they will likely go into that much of repurchasing. So they don't have to buy all of it. They don't have to look at all of it, but you do need to pay attention to this, because they tell you right here, it's liquidity support. Lack of liquidity means that you're typically in a risk-off environment, but if you have liquidity support, you have a large government body that says, hey, we don't want the market to tank, but these government bond yields, they're a little too high. So the price of bonds are a little too low. So we want to see the price of bonds go up, and what is going to support that? Liquidity support. So the Treasury is going to have from May 28th all the way through June, all the way through July, they're going to have potentially major buybacks of specific types of securities. So this is something you want to pay attention to and be aware of, that this can happen, because that's going to help support the market. And what happens when the Treasury supports markets? Well, you get interest rates, which are very high right now. You get interest rates which end up going down. And let's see. I think this is the 30-year coupled with a 10-year and 2-year, right? These are the actual bonds themselves. You can see the prices of bonds have gone down quite a bit, whereas the price yields of these have also been steadily rising. So when you have yields that are going up and you've got bond prices going down, then you see the Treasury is going to say, hey, I'm about to step in here, to a point where we want interest rates which have been going up, we want them to go down. So our bond prices are going to go up, stocks are going to go up, and dollars also going to fall as well. So those correlations, those are all taught in ICT's 2016 mentorship. So I highly recommend you go deep into that and study it. I'm not going to have enough time to go deep into that today, but it is worthwhile studying on your own. So definitely check that out, because that's the market kind of tipping its hat to us in terms of where we're going to go. Additionally, seasonal tendencies. May tends to be bearish, but it is not. It is anything but that right now. So what does that mean? Well, if there is a month which is traditionally incredibly bearish, right? But it's bullish, I think that tells us a lot, because what that means is that now we've been expecting, a lot of people have been expecting the markets to head lower during sell in May, go away type type environments, and we're at all-time highs. But it is an election year. Hey, stock trader, how you doing? Good to see you. So we know that we're at all-time highs, right? If you didn't take notes during that whole bond discussion, I highly recommend you rewatch this and replay that, and then go study what ICT teaches about bonds. If you skip that whole chapter, I would not recommend you skipping that chapter. It is a very important chapter. Hey, what's up, Forex Ragnar? Good to see you both here. Good to see you. Good to have you. So we're going to take a look at NASDAQ next. And we know that we are at still an all-time high, essentially. From a weekly perspective, we see that we traded down to this here, this bullish order block. We traded down to it, and then almost instantly had markets prompting us to go higher. So I find that to be quite interesting. I find that to be very, very election year-esque. And I think that there's quite a lot to talk about today. But first, let's take a look at the weekly. So we have this wick up here. Now remember, we were using this wick before, and we knew that there was a previous new week opening gap. So that was our original draw, was this midpoint here. We saw it bolster up higher. We saw it end up trading almost all the way up to this, but fall short and trade all the way back down for a TGIF trade. This week, we see that we've started, we started the week heading lower first, but now we've started to head a little bit higher. So we traded lower first, and we're now in the green. So will that stay? I don't know, but we do need to stay cognizant that we have another gap here, which can be measured and graded. So you're going to want to pay close attention to how price reacts at this key level and its consequent encroachment. So if price trades up to 18,301, what happens there? Does it stagnate? Does it just stagnate and then keep encroaching higher and higher, ultimately targeting these relative equal highs? Or does it trade up to the 25% mark or 50% mark and instantly reject from there? That's both of those type of behaviors are what's going to be something that you want to watch for, because that's going to tell you, hey, are we going to go higher for buy stops and then trade lower, or are we just going to keep squeezing shorts and keep this train going, keep it rolling forward, right? So those are some questions that we'll have to figure out, but we're not 100% sure about, right? So let me get the new week opening gap here. Give me a second. I'm on a different screen here trying to grab this data. It's not letting me. Huh. I should send these back. All right, I'm gonna have to shift this just slightly here so I can grab this. So I'm trying to grab the new week opening gap black line, so I have to create a whole nother one here. All right, there we go. Got it. Sweet. That's what I wanted to do. Okay. I want to move this all the way over here. And so that I can put down that new week opening gap. Let me find 1700. So we closed here. and then we open down here. So we now have a new week opening gap. I'll go into that in a moment here. Don't worry. Just need to do one thing here. And make these old new week opening gaps as well, so that we know what we're referencing here. Okay. All right, we're back. All right, so Fluidity FX. I am on the micro NASDAQ. That's MNQ. It trades exactly the same as NASDAQ. You'll notice similarities between the charts, the price action. It's all the same, but it provides you a lower, it's 1/10 the value of a full mini NASDAQ contract. And that's very important for those of you who are using prop firms. So most of you who have come to my channel, you know that here in my links here, you know that when you click on this is my prop firm that we trade on. It's Apex. They have an 80% off sale right now. So it makes a lot of the lower accounts quite affordable. Not for everybody, but they do. So this is what I'm trading on. I'm trading on a micro NASDAQ chart in Rhythmic for Apex Trader funding. So it's easier to control with a smaller account. You can control your risk. You can control your drawdown. And that's really important. Forex Ragnar, how election year can influence the market. So in the United States, every 4 years, we have a presidential election. And every 4 years, during election years, price action just goes so insane. And it's oftentimes the year that you see trends trend away from what seasonally occurs during a natural year, because you've got presidents that don't want the stock market to tank so that they can try to secure their their place in office by showing that, hey, they can choose to prop the stock market up. So this is kind of what you're seeing here, right? We know that the US has a shit ton of debt. They're in a really strange place internationally, but at the end of the day, no president wants to see the stock market tank during their election year, because that's a almost guaranteed way to get voted out of office. So that is something that I am looking into right now. And yeah, they don't want it to go lower, but we'll touch on that in a moment as well. And let's continue on with our analysis first, so I can get you at least down to the 1 hour and 4 hour section. So what I'm going to be looking for this week, I'm going to be looking for this here. I'll be looking for that swing grade there, which is quite important, because you're going to need to, let me get rid of this real quick here. You're going to need to pay attention to the consequent encroachment of that level, which is the midpoint of that wick. That can always be of interest. And we can kind of see that within this week already, you can see that we have traded to, the close of last week was 18,255. The high here was 18,254.75 here. So we traded to almost last week's close. So we haven't hit it yet, but we traded lower from that. And we know that we've got CPI and CPI this week. So that's going to mean I'm looking for a Wednesday reversal, Wednesday high or low of the week on this weekly profile. So what have we left beneath us? We've left a fair value gap, buy side imbalance, sell side inefficiency down here. If you can't see it, let me do one of these. It'll be easier to see this way. So you can kind of see that we've left from this high to this low, or this high to this low. There's this buy side imbalance. There's a new weekly volume imbalance that could be a draw on liquidity lower. And there's this high to this low, which is a dynamic buy side imbalance and a premium. So that's all of these things I'm taking into consideration for the weekly bias this week. I don't think that it's going to be an easy week to trade. I think that CPI is going to show us what direction it wants to go. But I also do see that on the weekly chart, we're back up in an area of consolidation. So we could just continue to consolidate here until there's a movement higher to take out some of those all-time highs, essentially up here. So on a weekly perspective, I don't think we're going to go higher. I think that we might go higher a little bit in order to start to head lower, because that's where the more clean liquidity voids are. If dollar does not go higher, though, I would be surprised if the stock market just continued higher. I would be more expecting that this week turns into maybe like a midway candle, maybe it expands higher. It's really tough to say because we're right in the middle of a giant range right now, and we're in a premium. So technically, if it wasn't an election year, I would be looking for shorts. But because we have that May buyback liquidity support, I would also like to see us close above that 50% level and then rush quickly for that 18,348.06 high, relative equal highs there on the weekly. Because when we go down to the daily chart, you can kind of see how even on the daily chart, there's a previous wick high that's right around that high that formed yesterday on Friday. So now you have relative equal highs. You don't have higher time frame imbalances above those previous highs. So I think we could reach up there. We would need a little bit of help on CPI. But if we trade up there, close above the 50% here, then I fully think that we are probably going to end up reaching for this new week opening gap. And if we're really bullish on the rejection block, it's at the midpoint of this old new week opening gap. LP trades, what do you think about SMT between bond market and index on the 4-hour? I actually have not looked at the SMTs lately. It's something that I just know I have tried. I don't see it nearly as quickly or as easily, and I don't see it as powerful of a tool for me personally, for my models. I could care less about SMT, but we're going to take a look at that. Specifically, when you look at your 4-hour here, usually you want to look at correlated markets, so your bond market. Bond market, and so we have low, higher low, low, lower low, low, lower low. So you're typically looking at SMTs between different instruments within the bond market, as opposed to bond market versus NASDAQ, in my opinion. I have not looked at an SMT between bond market and NASDAQ, I'll be honest, and indices in general. So I unfortunately would not be able to speak to that as well, LP trades. Fluidity FX, I'm short bias for NASDAQ. Cool. Yeah, I mean, we're in such a premium. Like, I think weekly we're in a premium, daily we're in a premium. I think that there's a lot of movement higher into previous areas of liquidity, which we've mostly painted all the way through. If we close above 18,200, I'll be long biased. Yeah, could be. 18, I mean, we're technically above 18,243. We're at 18,243 right now. But depending on what time frame you're looking at, you might be looking at a different time frame too. I'm not sure. Whenever you state something, you want to always identify what time frame you're looking at, because different time frames look far differently if you don't propose what time frames you're looking at. So cool. So taking a look at the daily here, we see that we created this relative equal high up here, right? There's no imbalance here to be seen on the daily chart. But just note this daily high here, and note that we failed to achieve to get there. So that, in my opinion, is something worth watching. And the midpoint of that wick, of course, is something worth watching. How this behaves if this short-term high, if we break through that and then come back down, how we treat that, if it's going to be treated as a mitigation block or not. And we are also noting that we have a lot of liquidity beneath us. So there's a buy side imbalance on the and let me draw a quick Fibonacci from this high to this low. It's the weekly range, or weekly chart range rather. So we see that the 50-point side is right here. This is the 50% mark. We see that's at a propulsion block high. We see that we have not traded to that yet. So, and that there's not only a buy side imbalance, volume imbalance above it, but also it's right in the middle of a buy side imbalance as well. So it'll be interesting to see if it does have the juice to trade down that far, maybe during CPI or something. But I think for now, we are starting to see some slowdown, but we're not seeing like a lot of black candles, right? So if you compare October of 2023 through January of 2024, so like 3 months, right? Every quarter. And then you compare with how many down close candles occurred within that range versus how many down close candles occurred in the next, range as well, you're going to get a starkly different measurement there. So you're going to see that it was far less down close candles than we have right now. So it's very clear that people are legging into shorts, and you don't want to necessarily fight that, of course. You definitely don't want to fight that, at least. So what you want to do is make sure that you are keeping this in mind so that you can scalp appropriately. All throughout this week, we had plentiful times previously on Wednesday to scalp. Thursday was a little bit harder, but still worthwhile. And then Friday, of course, was a pretty good day as well. So again, this week, I'm looking for a price to create a low of the week to head higher. That's my initial bias, but that does not need to impact your bias. If you see something, keep that bias and see how that works. See what thoughts, write down what thoughts were supporting your bias in that direction and see how it plays out, right? Nobody happens to know on Monday yet, unless you're a market maker that knows everything and can impact a lot of things there. So, okay. So 4-hour chart, again, we're smack dab in the middle of everything here. So even though shorts look to be more profitable from a premium perspective, there's a lot of things that people can do if too many people short. So yeah, I'm going to be careful this particular round because I don't see a super clear draw on liquidity. I see the ones that were older as part of the IPTA 20-day and 60-day highs, so I think those are going to be referenced at some point. Yeah, that's really all I've got. We need some more direction as to what's going to happen next, because I don't see clearly whether or not this wants to head lower and treat this as a return to original consolidation for the sell side of the market maker sell model. So I don't know. Okay. This is a week that we want to continue to hold our risk until we see evidence otherwise. After the first Monday, after the Monday that we have, it's going to be a lot easier to follow and track than debug in terms of price action. Okay. So, let's see if there's anything else here. LP trades compare SMT between ZB1 and ES1. Again, you need to specify what time frames you're looking at, because on SMT stuff, I don't even look at time frames lower than 15-minute or hour oftentimes. I'll look for the big daily ones. Those give us a much better idea of if a trend is changing. But you need to know what time frames you're looking at and what you're comparing as well. Trying to look for SMT when I don't understand that concept, I think is a little fool's gold right there. But if you use it, then use it. You know, if you see it, then, you know, if it works for you, great. If it gives you a really high percentage of probability and accuracy, then fantastic, you know, go for it. Okay, so this weekly profile, we've seen the previous weeks has not taken out the lows of the past few weeks. Lows have not been taken out. Back here, we saw lows kept on taking out and getting targeted. But this time around, it's highs and close gets targeted right there. Highs and close gets targeted right there. Close, but not the high, is being targeted right now. And I think that it has the ability, if it's going to go up first. We're going to take a look at dollar here. So if we have price trying to go higher briefly, we will see dollar spike a little bit. But the moment we see dollar reach this relative equal high, we need to be ready to see dollar and see if dollar ends up squeezing or not. If it does, then obviously the short is on the indices is gone because dollar isn't supporting it. And if we see a really big dark candle, well, you know what to do, right? You know what to do on the dollar. When dollar goes down, indices go up. So we need to see our highest probability trade right now, in my opinion, is looking for evidence that dollar is going to rocket higher. And if that's occurring, we need to look for instances where we will see displacement lower. Now, we're not going to see that on the weekly chart here. We saw this short-term low, we saw this short-term low, and this short-term low. All of those were blown through here. So now we have a short-term low here, as well as here. And then this turns into potentially an intermediate term low if we don't come all the way back down. So I'm looking to see if this turns into an intermediate term low or not. And then if so, I would like to see it traded through all the way to the downside. Okay, so this week, I will be looking for prices to continue on this trend for a little bit. Maybe aim for these IPTA highs. Maybe it's going to be a wick during CPI that takes out these. But I think that that's where we're likely to head to finish off this market maker buy model and continue higher. So again, that's a little contrarian. Everyone's looking for shorts, and that's okay. But I would need to see displacement to the downside, like really big displacement, that takes out intermediate term lows for me to get bearish. Okay. Okay, cool. So, that's really it for tonight. There's nothing crazy that you need to be aware of in the news that I'm aware of. We see these monthly red levels are here as well. So, can it travel all the way down there? Possibly. Very hard to see it come all the way down there, but I suppose it's possible. And I think that's it for today. There's nothing special about these markets going on right now. This is really, really tough conditions to trade in. I'll be perfectly honest. If you don't know your model, you don't know when it happens or when it's likely to happen, then you're kind of out of luck, you know? So, yeah, I would stay clear this week. Stay clear this week. Let the data come to you. You know that Monday is going to be kind of goofy with PPI and 8:30 in the morning. And then on Tuesday, you've got core CPI on Wednesday, the 15th as well. And yeah, this plays for a lot of fireworks and a lot of movement come Tuesday and Wednesday. Thursday, we'll probably cool down a little bit. FOMC speakers. Friday, nothing really going on, but Fed speakers again. So, okay. So, I don't see a great bias. We're in the middle of a huge range here right now. And I don't like being in the middle of sections before I trade. So, what I'm going to end up doing is I'm going to be hands off until I see one of the short-term lows or short-term highs that are key to me to tackle. I'm going to wait for those and take action quickly when I see those. All right. So, 4 hour, 1 day, never mind. Okay. All right, so I think that's gonna be it for tonight. We're gonna wait and see what plays out on Monday. Our stream of conscience, our gut feel, in my mind, says that since we saw institutional order flow entry drill on this gap, that we're likely going to head higher, at least up into this sesame, or this sell side imbalance, buy side inefficiency. I think we could head up to there. But if dollar decides to really rip, then there's no chance we're going to get back up there. So that's it for today. Any questions? Sorry, LP Trade. Sorry I wasn't able to, talk through the SMT as much. I know some of you use that tool. I just don't use it that much. Cool. So let me pause there. Any questions for folks? Any questions from folks? Hopefully that helped give you a little bit of what I'm thinking about, what I see. Do not let what I see impact what you see. If you see something, make sure you write it down. In this type of range, I see us possibly just, going up and down a bit within this range here, and then potentially coming back up to target the IPTA high up there. If that happens, I'm going to be very, very bullish in the months of June and July. Okay? Because of that treasury item that I mentioned earlier. So, looking at the chat, doesn't seem like there's too many other questions here. We'll see if the short biases win. I think that we're going to stagnate a little bit. So it's going to be both sides taken. Depending on what CPI prints. If it prints anything equal to current change in CPI or less for some reason, then we're going to be able to rock it. But if not, that's going to be the catalyst for us to head lower. Yep. You Fluidity FX, you share the same sentiment as I do, basically. Yep. I know that we're in a premium, but I also know that that liquidity being provided by the central bank and by Treasury is very, very impactful. So as it gets closer to the end of May, if it ends May as a bullish month, I will be okay going bullish into June and July, especially July. As you start getting into those summer months, I mean, if the stock market isn't ripping by then, we've either had a war announced or there's been something, some other flu or something like that, some major economic event that has to trigger those repricings lower to scare a lot of folks out, right? So I will be waiting for that. I'll be looking out for that, right? These are some of the most difficult places to trade, but when you see something like this, where you've gone and displaced below lower lows there, you're looking for price to head higher and then continue to drop below these lower lows there, right? So those are clearer than when price dropped below that low. You knew price is likely to head higher, come down, enter a fair value gap, continue higher, take those folks that trailed their stops up out, and then continue heading higher. So we'll see if it heads higher. I mean, but we're cognizant of the precarious situation we are in, and it never feels good to go long in a premium, right? Which is what we're in. We're in a huge premium right now, but with an election year, anything goes. Okay, so we have to wait this week. Do not go risk on from the balls to the walls. You know what we have this week. You know we've got on. You know what we have going on this week. You know we've got core PPI on Tuesday and core CPI, as well as Powell on Tuesday, and core CPI on Wednesday. So once CPI occurs, I think that trading is going to be a little bit easier this week on Thursday and Friday. But again, I wouldn't be risking a ton on Monday and Tuesday. Just my thoughts. So be careful with that. Yeah, be careful with that. I'm going to likely end up just continuing to build up these performance accounts. I've used the profits to continue to buy some more, and I continue to pass them. So, right, knock on wood, we're still at 7 or so performance accounts. So I'm taking them very, very slowly. If you've seen me over the past 3 months, right, I can only trade once or twice a week. So that amounts to, I don't know, it took me, 2.5, 3 months to get the first payout, right? So ideally, once you break the trailing threshold, though, it becomes much, much more like a true futures account in that you don't have a trail anymore. So once you build up past a certain point, you can start to add contracts when it's ready, and it'll be able to naturally provide you with the kind of setups, provide you with the same number of contracts, maybe a slightly more, so you can continue to gain percentage income. So Fluidity FX, unless they decide to squeeze the market, yes, which is very possible in an election year. Absolutely possible, right? President Joe Biden would not want the market to crash on his re-election campaign, because if so, 100% Trump's going to win. I mean, the RFK Jr., I don't think he's got a true shot, but maybe he's got a shot. But yeah, if Biden doesn't support stock markets so that he can say, look at what we did here, stocks are at all-time highs, if he can't show that, then it's going to be an easy victory for Trump, I think. Okay, cool. All right, so I'm not seeing too many other questions in the chat here, so seems to me people are pretty good. Any other questions in the chat? Anything on your mind? Anything on your mind that you're wondering about, right? If not, I'm gonna go fold some laundry with the wife. uh, hopefully are you guys all passing your accounts? Are you slowly building them up? Who is anybody doing Apex Trader funding with me? Hopefully you are able to make use of this, because I've never seen an opportunity like being able to use prop firms like this before. They've done such an incredible job. Apex Trader funding is one of my favorites for sure. Fluidity FX asks, how often do you stream? So since I work 9 to 5, I can't stream during the day, like be on, like you can see in this corner. I in this corner here, I don't stream like live after 9 o'clock in the morning, but usually on Wednesday mornings and Friday mornings. Those are the days that when I stream, and I'm usually up at like 6 or 7 a.m. to stream. Okay. So those are my times. And then Sunday prep, of course, we'll always try to be here 8 o'clock or 9 o'clock Eastern, somewhere in that range, to prepare, look for what's going to happen this week. We can see that this week is already, you don't see those big, juicy candles anymore, right? You see a little bit more of people selling into the rises. So there's a little bit more here now that we need to watch out for on the sell side. And if we see a drop here, then that's going to be our key that, hey, we came back up into this midpoint of this dealing range of this original consolidation. Time to head back down to first stage distribution and then some. Jose de Pina, you need help. How do you need help? What do you need help with? Yep. Yeah, you can set notifications. I think on, like, let me go to Inner Circle Trader, because I'm always on his channel looking for stuff. I think you can go here and click all, and then that's how I got notified on like whatever Michael Huddleston sends. You can do the same for me. Jose de Pina, you're doing Apex. Yeah, I mean, if I'm a trader, I'm a firm believer in Inner Circle Trader concepts. So the only reason why I'm starting to have consistency is that I shut my contracts down to 1%, right? I shut it down so that I'm only trading with 2 to 4% of my whole account. Meaning, if I have a $25,000 account, if I've got a $25,000 account, the trailing drawdown on that, or sorry, 50K account, the trailing drawdown's minus 2,500. So until I make it to 52,600 dollars, I'm not breaking risk by risking more than I need to. It is a slow and painstaking process, but if you know how to trade, you're going to easily be able to take, 4 contracts at a time times 50 cents per contract times, let's say that you go with 4 contracts times 30 handles. So if you are good with trading, at least on micro NASDAQ, and you can find those 30 handle runs, you don't have to. You can go for 10 handle runs too, right? But it's going to take you a little bit longer if you don't. If you go for 10 handle runs, you're going to get $80 out of that, right? Maybe less. That math doesn't seem right, actually. Because 1 contract times 4 ticks per handle times 0.5 times 10 handles. Oh, yeah, I guess so. So 1 contract is going to give you $20 per handle, right? So you kind of need to calculate what is your risk? What is your allowable risk? And do you want to take on that risk or not? You need to be able to calculate what your risk is. Trying to figure out where my... Thought I must not have saved it. I have a risk tool here somewhere. I usually have it available somewhere here. Something like this. So let's say, yeah, so if you go to my risk YouTube video, so my risk YouTube video is here under playlists. You'll see 2023 new traders. If you go to funding account risk management video, in the body of this video, there's a link to my risk calculator right here. So if you want that, you're going to need to go over to that and work with that, right? So where is my risk tool? Here it is. Okay, so on this risk tool, you can essentially enter the value per tick, which is 0.50 per tick on micro NASDAQ. And you can tell the system, hey, what percentage loss would I like to take? If I want to take a max loss of 1% each and every trade, then I'm only allowed to risk $25 for every trade that I trade, right? So if my account size is 2,500, what does that mean is my stop loss for an allowable 1 contract, right? This is how many contracts you're using. If I'm using 1 contract, I can have a stop loss of $12 and 12.5 handles before I lose $25. Now, at the bottom of this, I also have a rough guesstimate on if you use 1 contract. Let's say you aim for 10, 20, 30 or so handles of profit. Well, 1 contract, 10 points on micro NASDAQ is going to give you $20. If you get 20 handles, it'll give you $40. 30 handles, $60. This is all when you're risking 1%. So go through that video. I'm not going to explain it all right here. It'd be too long. So go through that video. Make sure you look at that. Make sure you see what is, helpful for you and take that in. Let me see what other things I missed here. Stock Trader 00. If you can make the same amount of money at your regular job, 8 hours, by trading for an hour, that times 10 to 20 accounts, that will be nice. Yes, absolutely. Now, it would probably be poor risk management to handle 10 or 20 accounts and trade with 10 or 20 accounts at one time. Probably more easier to hedge your risk by trading 5 out of those 20 accounts. I only have 7 right now. I have had 20 at some point, but I had traded really dumb and blown many of those accounts. So, but yes. So Jose, look at some of my you have to go through and trade demo. If you're new, you don't know what your model is yet, and you can't clearly write down what steps you need to do. You need to be able to write your steps of your model down on a piece of paper, and it be so simple that it's step 1, look for this. Step 2, look for that. Step 3, look for that. If that happens, then look for that. You need to be able to write your strategy down very clearly so that you can read it on a piece of paper. If you can't do that yet, you're not ready to trade real money. I'll be perfectly honest. And that's okay. You can save a lot of money and time by trading demo and making sure you're 100% crystal clear with what your strategy is and what your model is. Okay. Fluidity, trade copier. So since I trade Apex prop firm, I use Apex Trader Funding trade copier, and it works really well. Not if you use Tradeovate though. Tradeovate, there's a lot of issues. I've heard that people use Replicanto quite well across many different prop firms too. So Replicanto has been one that I have heard does a good job. And then of course Apex Trader's trade copier as well. It kind of looks like a similar setup. It's just basically it lets you flatten all the charts. It lets you choose a leader, and then you choose which accounts you want to copy. And you can copy between evaluations and performance accounts as well. So I would say those two seem to be the best so far that I've heard of. And people in the industry use Replicanto as well. But by no means this is the only one, though. Okay. All right. Well, it is 9 o'clock. I have to head out for today. I spent a little bit more time than I thought I would today, but it seems to always be the case. I want to make sure I answer your questions. So I am going to get going now and try to trade safe, wait for the big events to happen this week. Again, I'm looking for a Wednesday reversal, whichever direction we go. Be careful on Tuesday when Powell speaks after 10 a.m. Just be really careful. Let it simmer out. If it forms something by then, great. Look for fair value gaps to form during that time. But anything Powell says can have a really stark move on the market. So really be careful when Jerome Powell is speaking on Tuesday, okay? And then ideally, the best trades will come Wednesday after CPI has run its course and you get into Thursday unemployment claims and beyond that, right? So let's see. Stock trader, I trade only 3 accounts at a time. 1 trade per day, sometimes losses, sometimes winners, but the winners are bigger by the end of the week or month. It's all profitable. I traded micros only. Awesome. Great job, stock trader. Keep that up. And then naturally, once you get past the trailing threshold for performance accounts, it'll be so much easier for you to trade with a much larger buffer, right? It'll be like you're trading a true account. All right, folks. That's it for me tonight. We'll see you. I'll be watching the markets on Monday, but I will be live streaming on Wednesday and Friday. So we will see you bright and early on Wednesday and Friday morning. And we will see you right around then. Okay. So everyone, have a great rest of the evening. Get some rest. Stay hydrated. And if there's any other questions that you have, just drop them on drop a comment on one of the videos. But I trade ICT, so I'll probably direct you to some ICT videos. But yeah, be careful. We are at a huge premium this week, so be very careful. We can go lower, we can go higher. When there's a case to be made for both, gotta sit down, right? Gotta sit down. Fluidity FX, your main instrument is only micro NASDAQ. Yeah. So I can trade up to 170 micro NASDAQ contracts. But I can trade only 17 minis on NASDAQ. So you don't need that much, right? I've 1%, 2% risk on a 50K account, which is a minus 2,500 drawdown, is already 1 or 2 micros at most. I mean, I do end up over leveraging by a little bit more, maybe 3 or 4 micros tops, but you don't need a lot. You can make hundreds of dollars if you use 5 to 10 micros, and that's essentially that's one mini NASDAQ essentially, right? So I trade micro NASDAQ. I like the way it moves. I've studied it the most. I love the way it moves and I understand it the most. So That's my bread and butter. I like ES as well. YM I don't like very much. I've tried to trade it, not that fantastic, but I know lots of other traders trade YM, the Dow. And I know friends that trade Forex as well, you know, Forex, gold. I know a lot of friends that trade gold. I don't personally trade those instruments. I trade oil from occasion. And you know, I'll trade oil, Nasdaq, ES, micro Nasdaq, micro ES, right? Hey Jay Whitway, I'm actually heading out now. Good to see you. Long story short, I reviewed the impact of our I reviewed the impact of the treasury. So that treasury providing and support liquidity coming in the end of May into June and July. Long story short, we're in a premium, and I can make the case for both directions. And when I can make a case for both directions, we are in scalping mode only. We're looking for 10, 20 handles maximum. If we get 30, fantastic, but we're taking a large chunk of our profits at 10, 20 handles until we see Wednesday happen. After Wednesday, there's a good chance that we'll see the low or high of the week, and we'll have a profile that reverses at that time. Not guaranteed, but that's what I'm preparing my mind for, okay? So you want to go back, if you don't understand what we're talking about with weekly profiles, you want to go back into ICT's 2016 content and study that video that talks about weekly profiles, because framing that ahead of time, if this happens, then I expect that to occur. That's kind of like, it helps you get a sense of what you might end up finding on these weeks. So, okay, cool. So good to see you as well. I got to head off, help fold some laundry. So take care. And yeah, good luck trading. Stay safe, get some rest, and we'll catch up on Wednesday and Friday morning. All right. Take care. I will be posting on community with some things that I see. So keep your eye out for that. And if you don't have notifications on, you know, check and see if you want to. You're more than welcome to, but you don't have to. But I'll try to post what I see if I get up early enough on those days. So, all right, take care, everybody. Have a good night. Good luck trading this week.